Question 1. Someone alleging that he was the victim of fraud, which induced him to enter into a contract, must prove that A. The false information was material to the contract now being challenged. B. It was reasonable for the victim to rely on the false information. C. Relying on the false information led to harm suffered by the victim. D. All of the following must be proven to establish that fraud has been committed. Correct answer is D. All of the following must be proven to establish that fraud has been committed. To prove fraud in a contract, the alleging party must generally demonstrate the following elements. A. The false information was material to the contract now being challenged. The misrepresentation must have been significant enough to influence the other party's decision to enter the contract. It must be a fact that a reasonable person would consider important in making their decision. B. It was reasonable for the victim to rely on the false information. The reliance on the misrepresentation must have been justifiable. The victim can't claim fraud if they knew the information was false or if it was obviously false. C. Relying on the false information led to harm suffered by the victim. The victim must have suffered actual damages as a result of relying on the false information. All three of these elements must be present to successfully prove fraud and potentially have a contract rescinded or receive damages. Misrepresentation describes the unintentional providing of false information, while fraud is deliberate. Question 2. The most commonly used type of home construction material is A. Corrugated metal, B. Stucco, C. Wood frame, D. Granite. Correct answer is C. Wood frame. While corrugated metal is used for some residential applications, like roofing or siding in certain styles, it's not the primary structural material for most homes. It's more common in industrial or agricultural buildings. Stucco is a popular exterior finish, but it's applied over a structural framework, which is often wood frame. Stucco itself is not the primary structural material. Granite is a natural stone used for countertops, flooring, and other decorative elements. But it's too expensive and impractical to use as the primary structural material for most homes. Wood frame construction is the most common method for building homes in many parts of the world, particularly in North America. Wood is preferred due to its low cost, ease of construction, and design flexibility. Question 3. The real estate commissioner can impose restrictions on a real estate licensee in the following way as A. Their license is suspended for a certain period of time. B. If a salesman not being allowed to work for a particular broker. C. Imposing conditions on the licensee's real estate professional activities. D. All of the above. Correct answer is D. All of the above. The real estate commissioner, or the equivalent regulatory body in a given state, has broad authority to discipline real estate licensees for violations of real estate law or unethical conduct. These disciplinary actions can include A. Their license is suspended for a certain period of time. Suspension temporarily prevents the licensee from practicing real estate. B. If a salesperson not being allowed to work for a particular broker, the commissioner can restrict a salesperson's ability to associate with a specific broker, perhaps due to past misconduct involving that broker. C. Imposing conditions on the licensee's real estate professional activities. This could include requiring additional education, stricter supervision, or limitations on the types of real estate activities the licensee can engage in. The commissioner's disciplinary powers are designed to protect the public and maintain the integrity of the real estate profession. Question 4. A property's selling price appears on a buyer's closing statement as A. Debit to the buyer, B. Credit to the seller, C. Debit to the seller, D. Credit for the buyer. Correct answer is A. Debit to the buyer. The selling price represents an outflow of funds for the buyer and an inflow of funds for the seller. Therefore, debit to the buyer. The buyer is losing money, the purchase price, so it's recorded as a debit. Credit to the seller. The seller is receiving money, the sale proceeds, so it's recorded as a credit. It's important to remember the double-entry bookkeeping system. Every transaction affects at least two accounts. In this case, the same amount is a debit to one party and a credit to the other. Question 5. Ruby is hiking in a state-owned wildlife preserve and decides to take a swim in a nearby lake. However, Ruby doesn't see a sign declaring that the lake is actually private property belonging to George, with no swimming allowed. If George brings a suit for trespass against Ruby, she will likely A. Lose, because Ruby intentionally entered the lake. B. Win, because Ruby didn't know that George owned the lake. C. Win, because there was no damage done to the lake. D. Win because the public wildlife preserve was adjacent to the privately owned lake. Correct answer is A. Lose because Ruby intentionally entered the lake. Trespass occurs when someone intentionally enters the land of another without permission. The key word here is intentionally. It doesn't matter that Ruby didn't know she was trespassing. The act of intentionally entering the lake, which was private property, constitutes trespass. Ignorance of ownership is not a valid defense against trespass. Even if Ruby didn't harm the lake, she still trespassed by being there without permission. The adjacency of public land does not give anyone the right to enter private property. The boundary between the public and private land must be respected. Question 6. Which of these kinds of property would be excluded from being covered by the community property rule? A. Property acquired or held by one of the spouses prior to the marriage. Property acquired during the marriage by a gift or inheritance from a third party. C. Property acquired during the marriage by using resources, usually money, that are not community property. D. All of the above. Correct answer is D. All of the above. Community property laws generally apply to property acquired during the marriage through the efforts of either spouse. The following are typically excluded. A. Property acquired or held by one of the spouses prior to the marriage. Property owned before the marriage remains the separate property of that spouse. B. Property acquired during the marriage by a gift or inheritance from a third party. Gifts and inheritances received during the marriage are considered separate property, as they weren't earned through the efforts of either spouse. C. Property acquired during the marriage by using resources, usually money, that are not community property. If separate property funds are used to purchase an asset during the marriage, that asset generally remains separate property. For example, if a wife uses inheritance money, separate property, to buy a car, the car is her separate property. Question 7. A lease in which a party rents a property from the owner and then subsequently leases out the property to another tenant is called A turnaround lease, B. Sandwich lease, C. Secondary lease, D. Boomerang rental. Correct answer is B. Sandwich lease. Turnaround lease, secondary lease. Boomerang rental isn't a formally defined legal term in real estate. A sandwich lease occurs when a tenant subleases the property to a third party. The original tenant becomes the sublessor, and the new tenant is the sublessee. The original tenant is sandwiched between the landlord and the sublessee. Question 8. California's financial disclosure laws include the following, except A. Mortgage loan broker law, B. Seller financing disclosure law, C. Truth in Lending Act, D. None of the above. Correct answer is C. Truth in Lending Act. While the Truth in Lending Act, TILA, is a significant financial disclosure law, it's federal law, not specifically a California financial disclosure law. California has its own set of financial disclosure regulations. The other options are examples of California-specific disclosure laws. A. Mortgage loan broker law. California's mortgage loan broker law requires specific disclosures to borrowers in mortgage loan transactions handled by brokers. B. Seller financing disclosure law. California law mandates disclosures when a seller provides financing to a buyer. The Truth in Lending Act, otherwise known as Regulation Z, is a federal law. Question 9. The tax assessment roll, showing the assessed value of each property in an area, would be used to A. Set the tax base for the area. B. Calculate the proportionate share due from each property. C. Determine the tax rate. D. Equalize the taxes paid by the area's property owners. Correct answer is A. Set the tax base for the area. A tax assessment roll is a public record that lists all taxable properties within a specific jurisdiction, like a city, county, or school district. These individual values are then totaled to arrive at the overall tax base. This total assessed value is a crucial component in calculating the tax rate. It's divided into the amount of revenue the taxing authority needs to raise. It's a fundamental document used in the property tax system. It is the official inventory of properties for tax purposes. Question 10. A person who purchases an existing promissory note will become a holder in due course if the note is A. Complete and regular in appearance and form, BB, without a notice that it is overdue, dishonored, or claimed by another person. C. Purchased in good faith for valuable consideration. D. All of the above. Correct answer is D. All of the above. The phrase "a holder in due course" is a legal term that refers to someone who possesses a negotiable instrument, like a check, promissory note, or bill of exchange, in good faith and for value. This person has certain rights and protections that a regular holder might not have. A holder in due course is someone who meets all of the following requirements when they receive a negotiable instrument. Lawful possession of the instrument. They must have legal ownership of the instrument, which may be due to a transfer from the previous holder or receipt from the issuer. Giving value. They must give something of value in exchange for the instrument. This shows the holder's good faith and ensures that they are not receiving the instrument unfairly. Good faith. They must receive the instrument in good faith, without knowledge or any reason to suspect any issues with the legality of the instrument or the rights of the transferor. Timeliness. They must receive the instrument before it is due, if applicable. No notice of defects. They must be unaware of any defects of the instrument, such as it being stolen, forged, or disputed. Why is being a holder in due course important? A holder in due course has greater rights than a regular holder. The main advantage is that they can typically enforce payment on the instrument, even if there were certain defenses that could be used against the original person who was supposed to be paid. Example: imagine someone writes a check but then realizes they were tricked into writing it. If the check ends up in the hands of a holder in due course, the bank will likely still have to cash the check, even though the person who wrote it might have a valid reason for not wanting to pay. In summary, a holder in due course is someone who takes a negotiable instrument in good faith, for value, and without notice of any problems. This status gives them special legal protections and the right to enforce payment on the instrument.